How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. Welcome to August. You guys voted in the channel, and AU won, so we're going to be tracking AU for the rest of the month of August. I'm going to walk you guys through the steps of what my brain goes through in trying to understand the price action and what we should suspect, and some of the tools and ideas that I use to help further my price action in the future. So I come to August 1st, the first official trading day of the month, since it's a Tuesday. I'm going to count back 20 bars. So if you've been following me for a while, I do this every single month. That's my 20-day look back. This is my 40-day look back. And this is my 60-day look back. Then I'm going to cast forward 20 trading days as well. The reason I cast forward 20 trading days is because this is the playing ground that I have to find a setup, whether that is scalp opportunities, a position trade, or a swing trade. I have 20 days for the price action to most likely reach to a new side of liquidity, rate it, and run back to the other, a purge and revert. That's what I'm using within this 20-day period here. Now, once I have the 20-day quadrants, I'm going to look for the highest high and lowest low in each one. So the 20-day quadrant, the highest high is going to be here. Let me just double check. Yep, it's going to be here. And like the color code, keep it red for my highs. Then we got the 40-day high. Now this is both unbroken. These are equal highs. So there's definitely buy side liquidity above this high and buy side liquidity above this high as well. Then we got the 60-day. Now this has already been broken, but it can be used as an old high. And if price were to somehow find its way up here, there could be a sensitive reaction here, a nice scalp opportunity there. Now we have the low points. So you have this right now, currently, as your 20-day low. We have this as your 40-day low. You can see these are also equal, and they're not broken. So there's definitely sell side liquidity below the 40-day low and the 20-day low. We have the 60-day low, which is unbroken as well, which sell side liquidity is going to be residing below. So anybody that was buying in this rally up, or this rally up, or this rally up, you have a stop loss most likely below this low, and this low, or they have trailing stops, which is why the market's going to come back down and knock them out. Now at this point, what I'd like to do is figure out the range that I'm in. So the highest high and lowest low that we are currently trading in, and that would be the 60-day low to the 40-day high. So we got a premium and we got a discount. So anything in the blue is going to be a discount. Probability of buy scenarios are most likely going to unfold here. Anything in the red, probabilities of sell scenarios are going to unfold here because it's overbought and this is oversold. You want to buy in an oversold condition when it's cheaper, and you want to buy in an overbought condition when it's more expensive. It just makes sense. This line here is going to be equilibrium or our fair value. So we're going to just mark that off here so we have it in the chart. I want the chart to be as clean as possible. So that's our equilibrium line. This can also be a sensitive price point. So if price were to trade here, there could be an opportunity here during one of the kill zones or in the near future if price were to retest this line again. Because it's fair value, you're not paying a premium and you're not paying a discount. It's straight fair value. After that, I like to find some PD arrays that I can obviously see in the price action. So underneath in a discount from this high to this low, any discount arrays that we can see, absolutely. We have these two last down close candles before the rally up. We also have a fair value gap here, so we'll mark that off. So from here to here, got a fair value gap. We also have the bullish order block, so just mark off the actual swing high, because this is a swing high formation that just ran through with speed, so there's a market shift there. If you get it to click, there we go. So just put it in top right. We'll make the swing high red. At that point, I'd like to see if there's anyone in the premium range. So if there's anything that is formed above in the premium. So I'm looking now. We do have these two last up close candles here. We have a fail to get back up to this high here. So you have some type of order block theory going on here. So we'll just mark that out. We'll actually mark it off as a blue line because it's also a swing low. So keep it as a swing low. And then at this point, I like to look at something that I utilize every month is the seasonal tendencies. Now, the seasonal tendencies is not guaranteed. Many people have been following me for a while and they know I use the ideology of IPTA with the confluence of seasonal tendencies and price action. No indicators. So I would come here to charts.equityclock.com and I'm looking at Australian dollar solely by itself. And I'm not looking at AU because if you go on this page, you could click Forex and you could look at AU seasonal tendencies. I don't do that. I personally just look at them separately. Australian dollar versus US dollar. So here for Australian dollar, we can see price is going down. So the Aussie for August is supposed to be selling off. That's what it's saying. Doesn't mean it has to come true and it's going to form the same way it's showing here. It doesn't look like it's going to completely drop the same way it's going to do that. Sometimes it may come down, go up, then go back down. You can't solely base your price action solely on this because you see it doing a rally up and rally down. There's no days here, right? It's not quantifiable. I can't see what day 1 is, day 2, day 3, week 4, week 5. I can't see that here. I'm just realizing there's a time period of where Aussie is going to drop, potentially going into September. So that's something I keep into mind. Then inversely, I look at the dollar. Now we know that Aussie and the US dollar are inversely correlated. They need to be moving in different directions. So the seasonal chart, if it doesn't show that, I'm most likely going to ditch that pair and look at another pair. However, AU made the cut to the poll, and those pairs that I put on the poll are the same reasons I'm showing you why I prefer these pairs for this month. And there's another reason why, and I'll explain that a little further. DXY here is going up. So that's a good thing that we're seeing. We can see Aussie's going down and dollars going up for the seasonal tendency. That is great. But if I were to see something like this, so dollars going up for August and gold is going up for August, I'm not trading gold for August. That is something that I will have to cross off my checklist. I can't use that anymore. I want to see gold going down, if anything, and dollar going up, or vice versa. Dollar going down and gold going up. Then I would probably put it or move it forward to something I would potentially trade for August. I'm not going to trade gold for August because they're both moving in the same way. That's just something that I'm going to totally nip in the butt and leave alone. Why try and force something if the macros are not even suggesting that they're going to move in a unified form? If they're both going to move in the same direction, no need to look at it. So dollar up for August, Aussie down for August. So that's what we see here. And we're going to come back to this. I'm going to relocate where I think price is going to go moving into the first week and then the second week. Normally the second week, many of you guys know that that's where I normally find my swing trade or position trade or find more scalp opportunities. The first week, I kind of just find the small opportunities, 10 pips, 15 pips, and then NFP I would just completely leave alone. And then I will go into the second week ready to work. Now, if we go to dollar, we'll do the same thing. We'll come here to August 1st, count back 20 bars, and count back another 20 bars from here, which would be 40. So that's that 40-day look back quadrant. We'll come back 60 now. So that's another 20. So we got 20, 40, 60, and then we're going to go back here. Now I'm going to find the highest high and lowest low that we have within each one of these quadrants. So we got that 20-day high here. Buy side is above that. It's unbroken swing high. We have a 40-day high. It's unbroken. It's not a swing high, but it's a high that's unbroken. So there's still buy side above it. If you look to the left, right here, there's a swing high. So relatively equal highs. Still a part of that swing high formation. It's the third bar in that swing high. So it's still a significant price point. We also have the 60-day high here. Unbroken. So there's buy side here. So anybody that was selling, right, has a stop loss above these highs. Now, vice versa, we have swing lows. I'm going to double check to make sure the lows are correct. 9958, 9957. So this is the lowest low here in the last 20 days from the beginning of the month. Then we have this old low. You can see price is currently trading up into it right there. And we also have the 60-day low. So right here. At this point, I do the same thing. I try to find the range that we're currently trading in. So I find the highest high and lowest low. I keep it simple. Then I come here. I mark off the equilibrium line. And I notice where we are versus premium and discount. So I'm going to be looking for some premium arrays. So is there any premium PD arrays that I can see here? Yeah, you definitely can. I can see one here. Looks like price is getting drawn to it, right? And we want to see if it runs a swing low formation here. 102.51, 102.50. Yeah, 51. So it does run through a swing low formation. So there's that market shift there. And we have that fair value gap here. I'm going to look, and we also have this last up close here, or these three last up close candles here, also could be considered a bearish order block or some type of order block theory. Price has ran down as we knew for July. We were tracking that. A lot of people wasn't expecting it to drop down this fast, but we were able to see that last month. If you were following the tracking, you can see it came down, and towards the end of the month, right, we made that pivot, and I said, odds are I'm waiting for some type of pullback from dollar, and we got it. Towards the middle of the month, we got that pullback all the way back into this liquidity void here. Now looking below equilibrium, this dashed line, to look for any discount PD arrays that we have. So is there any discount PD arrays that we have? We do. We have this here. And we see price recently respected. Now, just because we saw price trade into it and respect it doesn't mean it can't be something that can influence price later on in the future. So that fair value gap there. We have this last down close candle, very small. It's the last down close before that huge rally back up. We'll mark that off. It's the bullish order block there. We have these two last down close candles as well. Another bullish order block theory. You have another one here. We can mark these off, but I'm going to keep the chart very simple and clean. The very obvious things that I can see, I mark off. Now going back to Aussie, we're going to talk about that. I'm going to also mark off the opening price to the month. So the opening price is very influential because it is another analogy that I like to use, which consists of being overbought and oversold. The opening price for the month, let's go right here, go August, open. Anything above is a premium, anything below is a discount. So I like to really emphasize that and put it on the chart so that we can see it throughout the daily trackings and we can understand where price is coming from. This is way too large. So we got this, and then we got the discount. Spin this around, just like that. So that's how I like to show folks premium discount. And try to keep it as clean as possible. I'll drag it out here so we can see it better. So you got discount. And we got premium. So right now we have a double confluence. And if anything, we have a triple confluence because I know it's below the weekly opening price as well. We are below the equilibrium range from the high to low that we're currently trading in. So price is trading inside this low and this high. It's been trading inside that. It hasn't made a relative new high or a new low. It hasn't reached for external liquidity yet. It's still within this range here and here. It's now below it, so it's in a discount. It's also below the opening price for August, so it's in a discount. And it's also below the weekly opening price or Sunday's opening price, or if the true day opening price. It's below that right now, so it's in a discount. Now, going into the first week, I normally let it play out, let NFP really blow over, induce all the traders to the table, because NFP is just a hype experience or event that gets all the retail traders to put up their money, and the market makers come in and they take their money. It's a rinse and repeat, pump and dump. That's all NFP is, in my opinion. Price is now either going to do two things. It's going to either draw down to these lows here and get back into this fair value gap and give a reaction higher. Now, if I'm going to follow the seasonal tendency, and it's not like I'm going to say, okay, it has to do it, it has to drop. If it's going to drop, I most likely want it to take out a high first, not a low. I rather it go up into a premium and then drop lower. It is ideal for the market makers or the commercial speculators to sell after breaking a high. It's just more ideal. And the same thing vice versa. It's ideal for the commercials or the market makers to buy after breaking a low. So if price were to break this low here or these equal lows and get back down into this point of interest, we would want to see probably buying come into play because it's in a discount. It's cheap. It's cheaper. It's ideal to buy in a discount scenario or oversold scenario. So if price comes down here, takes that out, gets into here, I would like to see price rally back up. At this point, I would look to probably sell. I want to see price take out a swing high formation or run into a low that is sensitive. So we have, like I said, these bearish order blocks here, the theory here, and we want to see price probably run into that and then sell off. But we want to get price probably back into a premium territory to find the ideal sell scenario. So we got to wait for things to align. We can't just force the setup. So if price were to get sold, I want to see it take out this high here. So that's the high I would want it to reach up to. If it's not this one, it's that one. If it's not that one, it's this one. But eventually, I would have to pick a side, especially going into the second trading week. I need to be on point and I need to make a decision because time is in the essence. You know, we have 20 trading days essentially before the next month. And I'm trying to figure out where price is going to go to give me my best bang for my buck. Now, not all the time am I right. As of right now, I know some people say, oh, you have a fabulous track record, but that doesn't mean I'm getting every day right and the daily draw right. Sometimes I'm wrong. Sometimes I'm right, but we got to take it day by day. This is why I like to use the daily chart because the weekly chart is concise, right? It's a larger candle, but the daily chart tells you day by day, is it going to take out the previous daily high or the previous daily low? It's a very simple answer. And I think anybody at any trading level, if they actually sit down and study the daily chart, they would understand how to get directional trend. So I want to see price get up here and then probably sell. But as of right now, I think the draw is still down here and then back up and then lower. But if we fail to get back up to this high, because that happens, we don't get a swing high formation above in a premium. Price could fail, give another lower high, and continue going lower and respect and not respect this discount PDRA as the sponsorship to go long. It could continue to break down and then use this old, because after it breaks it, it could potentially turn into that quote unquote retail support to resistance. So hopefully this makes sense. First trading week, we're not overthinking it. We're just going to analyze the price action. Allow me to break this down for you. I'm really happy that you guys support me. I'm really happy you guys ask questions in the channel, in the chat. It really motivates me to keep going and know that my efforts aren't being a waste here. Like I said, the same thing vice versa, real briefly. The DXY is supposed to be bullish. It's already showing signs of going higher, right? We broke a swing high formation here. We got a higher swing low here. And prices continue running up. So you got the down close candles. Look at how price recently printed 2 down close candles last month. And it quickly ran and engulfed them. Printed another small range down close candle. Engulfed the whole thing. So there are little things that I use that add up to the bigger picture of my trading model. And we can see price is probably most likely going to trade into this. We could get a reaction to go up and then go down. If you mark off the opening price briefly before we end here. That's your opening price, this dash line. We would like to see price probably come back down into like a bullish order block theory and then trade higher, creating a higher swing low formation. So we want to see a swing low potentially form below the opening price. That's where the commercials are most likely getting their net long position below the open at a cheaper price. The same thing can be said vice versa for AU. If they get price above the opening price, they're getting their net long shorts above in a premium. Hopefully this was insightful. Peace.